We're registered with the SEC as an investment advisor, but I just want to make sure everyone understands this is the presentation I'm going through is not investment advice. It's just for educational use only. And if you see anything in here you have questions about, you should consult a financial advisor to ask questions about. Let's see, we'll go to the next page. All right, so before I start, I always like to use this slide. And the reason is that blockchain assets are different than normal assets like equity or debt or real estate or commodities. And because of this, we have to think differently about them. Blockchain assets are networks, and you value networks differently than you value equity or debt or other types of investment assets. So for the next 30 minutes, I just ask you to open up your mind and think differently about this asset class. What I'm going to cover is a brief history of money, Bitcoin as an innovation. Why does Bitcoin have value? Because all it is software. Why add Bitcoin to diversified portfolio? Our models used to determine Bitcoin's value, and cover some of the risk and regulations around the industry. So a basic question, I might hopefully make this interactive. It's a simple question and anyone's free to answer, just unmute yourself. But what is money? Does anyone want to answer that question?
Money is a belief.
A belief? That's very good. That's a great answer. So that's yeah, I would agree with that. Money is a belief system. Any other?
It's a methodology of changing. It's like replacing barter. So it's a quantification where you can exchange value.
Okay, exchange value. That's a good characteristic of money. Any other ones out there? Okay, so the history of money. So we as humans 10,000 years ago, we lived in tribes of 100 to 150 people. And whatever the scarce commodity was in that local area, that's what we used as our money, as our monetary system. So for some tribes, it was shells if they lived near an ocean, or stones or salt. And then about 3,500 years ago, we as humans defaulted into a gold system. And the reason we did that is that these tribes would travel to different areas. And if one was using shells and the other was using stones, there was too much friction to do commerce. And, because the monetary systems weren't aligned. And so we as humans defaulted into a gold and silver system about 3,500 years ago. And then we started using gold coins. And then about 1,000 years ago, the Chinese invented paper money or paper notes. And we thought that was, a great invention because it was more portable and more divisible than carrying, bags of gold coins around. And so that was the new technology 1,000 years ago. And then the Medici family started using a new technology about 500 years ago called double entry bookkeeping, or ledger technology, as we call it. And this ledger technology is what we use today. And ledger and double entry bookkeeping, that's what enabled the creation of the bond market, banks, and the credit card system as we know it today. And all Bitcoin is, it's the same double entry bookkeeping system that we've been using for over 500 years with one additional twist to it. So all Bitcoin is one universal ledger, and it's updated every 10 minutes, and it's distributed around the world. And so this central source of truth, which is the Bitcoin blockchain, is, like I said, just one universal ledger. I would call it triple entry bookkeeping. We've had double entry bookkeeping for 500 years, but this new Bitcoin technology, this blockchain technology, is basically triple entry bookkeeping because of the added twist to it. We have the ledger, but it's, like I said, it's updated every 10 minutes, and then it's distributed around the world. And so there's one central point of truth in it. And so if we look at the history of money, like I said, it's 10,000 years of commodities like shell, salt, and stone, and then gold, and then we started using paper money, and then ledger technology about 500 years ago. But what happened back in 1971, about 50 years ago, President Nixon severed the tie between the convertibility of dollars into gold. We went off of the gold standard back in 1971. And so for the past 50 years or so, we've been on an experiment. We've been experimenting on this fiat system where our money isn't backed by commodities. And like I said, we as humans have, for 10,000 years, have used commodity-based money. It's only this last 52 years that we've been using money that's backed by the full faith and credit of the government that issues out that money. And I look at that as an experiment, and that experiment, in my eyes, is failing. You know, we see it failing. When you see prices going up because we're printing too much money, you know, that fiat system is you know, in the process of failing. And my thesis is that we as humans will default into a commodity-based monetary system again. And the new monetary system will be on the digital version of gold, which we call Bitcoin. And so some of the characteristics of money, and this is from the Federal Reserve, the U.S. Federal Reserve. The Federal Reserve says that money should be durable, portable, divisible, and of limited supply. And it's the limited supply that the Federal Reserve and the U.S. government's been violating over the past few years. And so Bitcoin has these same characteristics. Bitcoin's durable because it could live on throughout generations because all it is code. It's portable. It's, you could move Bitcoin, at the speed of light through the internet. You could store it on a USB drive or your phone. It's divisible up to 8 decimal points. The smallest unit of a Bitcoin is called a Satoshi. It's 1/100th millionth of a Bitcoin. It has limited supply. There's only 21 million Bitcoin that could ever be created. So it has the primary characteristics of money. But in addition to that, it's programmable. So for example, if I want to leave my wealth in Bitcoin and pass it to future generations and code it so that they could only spend that money at accredited universities, I could do that. So, whereas if you leave wealth to your children or grandchildren, they could take that and go spend it on a Ferrari or a nice house or whatever. But I could color code my Bitcoin so it could only be programmable and spent at accredited universities or something where I want that money spent. Bitcoin's easy to authenticate. Gold and dollars are hard to verify. Storage, it's easy to store Bitcoin. And one of the primary uses of Bitcoin and blockchain technology is that it's immutable. And what I mean by that is that once a transaction is printed to the blockchain, it can't be changed. And so if you're in the audit industry or you're a CPA or you're working at verifying ledgers, immutable transactions are very valuable. And because humans can't go back and reverse transactions. And so it makes auditing very easy. Just a little history of the oldest currency in the world today that's still existing is the British pound. Back in 757, the British pound was introduced. And what it was 16 ounces of silver. It was divided into 240 shillings. And then over the years, kings and monarchies would reduce the amount of silver in a pound, and they would use the difference to live above their means and use that to conduct wars against other countries. And then by 1351, King Edward had changed the weighting of a pound from 16 ounces all the way to 8.3 ounces. And so the British pound lost half of its value over that 600 or 700 year period. And then today, what's inside of a British pound today, 16 ounces of silver actually costs you 288 pounds. And so if you take 1 divided by 288, you come up with 0.00345 ounces of silver in a British pound. So you can see that the effects of inflation or debasing the currency has been with us for over 1,300 years. And, the point of this is that from 757 to 1351, over that 600 year period, when the average life expectancy back then was 35 years, people didn't notice that you lost half of the monetary value of the pound over 600 years because, it was spread out over such a long time period. But the problem today is that we are noticing the debasement of the currency because the US is printing a lot of money. The number of dollars that are in existence, based on M2 money supply, is up over 40% in the last 2.5 years. And so just like I showed, the British pound lost half of its value over 600 years. We've almost lost half of the value of the dollar just over the last 2.5 years. And that's being reflected in the prices that we see. When you see home prices and car prices and commodity prices and food prices going up, it's because it takes more dollars to buy the same thing because our dollars have been diluted by 40% over the past 2.5 years. And so Milton Friedman identified one of the problems with the internet when it was invented was that there was no way to transfer value through the internet from person A to person B without those two people knowing each other and without going through like a third party, like a bank or a Visa or like a PayPal to do those transactions. And that was one of the problems with the internet 30 years ago. PayPal's original mission back in 1998, they wanted to create a global currency that was independent of interference by banks and governments that were debasing their currency. So Elon Musk, Peter Thiel, and Luke Nosek, their original mission when they started PayPal in 1998, they wanted to create Bitcoin. They wanted to create the software that allowed us to do financial transactions without intermediaries. And they couldn't figure out how to do that. They worked on it for about 1.5 years. And so when they couldn't figure out how to do it, they based PayPal's mission on the US dollar rather than this piece of software that they were trying to create. About 1 year ago, I had lunch with Peter Thiel, and I asked him, I was like, what was the barrier? What prevented you from creating Bitcoin back in 1998? And he said it was the decentralization. They couldn't figure out how to properly decentralize the software so that the government could come in and shut it down. And Bitcoin's done that. Bitcoin is, figure out how to decentralize itself so there's no central point of failure and the governments around the world can't shut it down. So Mark Andreessen and I went to university together at University of Illinois. We did our undergraduates together back in the late 80s, early 90s. He was 2 years younger than me, but Mark Andreessen, when he left U of I, he took a piece of software called Mosaic, and he started a company called Netscape. And Netscape 30 years ago tried to create the software to allow us to do financial transactions through the internet on a peer-to-peer basis. And Mark couldn't figure out how to do that either. So Mark invented a piece of software called SSL, and SSL is the security layer that we use today to do financial transactions on the internet. So basically what we had to do was we had to build the internet on top of the existing banking and credit card system using this SSL technology. The problem with that is that whenever we do a financial transaction over the internet using SSL and banks and credit cards, we have to pay a toll to do that. And the internet wasn't supposed to be built that way. The internet's supposed to be a peer-to-peer system. Just like when I send you email and we send each other email back and forth, it's going from person to person, peer to peer. Our financial transactions, though, don't do that. They go through a central third party. And so you need permission to do financial transactions on the internet up until blockchain technology was invented. And that's why Mark Andreessen says today that the blockchain is the most important technology since the internet itself. And the reason is that we're rebuilding the internet today correctly. We're fixing the problem that was created 30 years ago. We're taking it off of the banking and credit card system, and we're replacing SSL with blockchain technology, and we're rebuilding it so our internet will have peer-to-peer financial transactions built into it. So what is this blockchain? What is Bitcoin blockchain? A lot of people really don't understand what it is. And so all it is software. It's open source internet protocol software. And that sounds like a lot of words, but we use that every day. When you get on the internet and you see up in the upper URL, you see HTTP up there. That's Hypertext Transfer Protocol. That's a version of open source internet protocol software. When you send an email, you're using software called SMTP, Simple Mail Transfer Protocol. That's another version of open source internet protocol software. And that's all Bitcoin is. That's all Bitcoin blockchain is. Someone named Satoshi Nakamoto about 14 years ago, figured out how to send financial transactions peer-to-peer through the internet. And once they figured that out, they gave that software to the world for free. It was a problem that we were looking for a solution for about 20 years. Satoshi Nakamoto figured it out and didn't start a company with it, didn't have an IPO, didn't raise money from venture capitalists. He just gave it to the world for free and said, here's the solution we've all been looking for. And what this software does, it solves the double spend problem. So the problem was that when we send data through the internet, I can copy and paste that data and send it to someone else. And that's fine because it's just data. But if I could send money through the internet and copy and paste that same dollar and send it to someone else, I've double spent that same dollar. And so, that's what the BitCoin software fixed. It solved that double spend problem. And the way it solved it was that it created a public ledger that's distributed around the world, and it's updated every 10 minutes. And that software enables the peer-to-peer transfer of value through the internet without a third party like a Visa or a bank or PayPal having to verify that transaction. And so that's why the software is so important. And so if we look at other protocols that were invented 30 years ago, we had TCP/IP. We talked about SMTP and HTTP. But what Bitcoin is really like domain names. And if you've ever bought a domain name, you understand what I mean. Why do domain names have value? And the reason domain names have value is because they're a scarce resource or scarce property on the internet. There's only one Nike.com or Amazon.com. And just like there's only 21 million Bitcoin, the value of Bitcoin will go up as more and more people use the software. Just like domain name values have gone up over the last 30 years. There's a person named Michael Saylor, who's the CEO of a company called MicroStrategy. Michael was buying up domain names 30 years ago. He bought Mike.com, Michael.com, Hope.com, Voice.com, Strategy.com. He bought all these domain names. Alarm.com is one of his companies that he owns. Anyways, he sold Voice.com. He paid $30 for it 30 years ago. He sold Voice.com last year for $30 million. He sat on it for 30 years and it went from $25 to $30 million. And so the reason Voice.com was only worth $25 30 years ago is because there were only a few million people using the internet. Today, there are billions of people using the internet. As more and more people use the network, the more valuable that property becomes. And so you could think about Bitcoin the same way. There's only a few 100 million people using Bitcoin today. And in about 10 to 15 years, there's going to be many billions of people using it. And as more and more people use it, the more valuable it becomes. Okay, so if we look at the Bitcoin economics, Bitcoin has a finite supply of 21 million. The issuance of Bitcoin is predetermined based on the software. And if you look at the amount of Bitcoin that's been created, there's been around 19 million Bitcoin created since the inception. It's going to take about 120 years to create the next 2 million Bitcoin. And so that's the supply of Bitcoin. It's hard coded into the software. And then if we look at the demand of Bitcoin based on the number of wallets, the Bitcoin number of wallets has been growing at over 500% per year. So if you have a finite supply of an asset and you have increased demand, the only other variable that could change is the price. And that's why Bitcoin's been the best performing asset class 10 out of the past 13 years that it's been around. If we take a look at the adoption of Bitcoin versus the internet back in the 90s, Bitcoin adoption is growing faster than the internet adoption. Currently, there's, like I said, a couple 100 million people using Bitcoin today, and it's projected by 2030, there'll be close to 4 billion people using Bitcoin. If we look at Bitcoin as a payment network, and this is 2021 transaction volume, we need to update this for 2022. But in 2021, Bitcoin was bigger than American Express and Discover in payment volume. It was growing faster than Visa and MasterCard. And the last time I looked was about 3 months ago. And Bitcoin had done about $6 trillion worth of payment volume in 2022. And so Bitcoin is fast approaching the size of MasterCard. And in a couple of years, it's going to be bigger than Visa as a payment network. If we look at Bitcoin adoption, and this is in the US, these are households in the US, about 50% of households in the US own Bitcoin today. It's only about 1% of the world, but in the US, it's about 50%. And when we use what's called S-curve analysis, this tells us that by 2029, about 90% of households will own Bitcoin in the US. A lot of people ask, have I missed the opportunity to own Bitcoin? No, the Bitcoin market cap and the total crypto market cap is less than 1 trillion today. And it's only a small percentage of the addressable market that's out there. There's a lot of concern about Bitcoin and its energy use, and it's not ESG friendly. All that is fake information or false information that's floating around out there. If we take a look at the number of terawatt hours that we use to generate electricity, it's 162,000 terawatt hours worldwide. Bitcoin is 189 terawatt hours. It's only about 1/10 of 1% of the world's energy use or generation. If we look at the energy mix of renewables that the Bitcoin mining industry uses, the industry globally is 56%. The Bitcoin Mining Council is around 67%, so we could use like 60% as the renewable mix. If we compare that to other industries in the world, Bitcoin is the greenest, or the greenest industry in the world. There's no other industry in the world that has 60% renewable in their energy mix. If we look at the carbon footprint of Bitcoin and compare it to other industries out there, like tourism, air conditioning, fashion, watching television, Bitcoin, the carbon footprint of Bitcoin is very, very small. And the reason is that the Bitcoin industry, the mining industry, they use what's called stranded energy because that's the lowest cost energy that they could find to mine Bitcoin. So stranded energy is like at a hydroelectric dam in Washington State, where there's not enough population around that dam to use up that electricity. And if you can't use the electricity and you don't have enough population within 500 miles, that electricity is just stranded there. You can't do anything with it. It's wasted electricity. And so what Bitcoin miners do, they co-locate the mining facilities around these stranded electricity pools around the world. There's huge institutional adoption in the industry. Ameren, local company Ameren, they mine Bitcoin. BlackRock, Fidelity, Goldman Sachs, Mass Mutual bought about $100 million worth of Bitcoin a couple of years ago. Tesla, Square, PayPal, they're all invested in Bitcoin. Here's something interesting. So we're going to talk about why add Bitcoin to a diversified portfolio. This is local in St. Louis. The Federal Reserve Bank in St. Louis back in January of 2018, so this is 5 years ago, they came out with a white paper on Bitcoin. And in the Federal Reserve of St. Louis's own white paper, they said, Bitcoin will emerge as its own asset class and thus have the potential to develop into an interesting investment and diversification instrument. The reason they said that is because Bitcoin is a non-correlated asset class. And so what I mean by that is that Bitcoin is valued as a network. It's not valued as equity or debt or commodities or real estate. And when you add non-correlated assets to a diversified portfolio, it increases the Sharpe ratio or the risk-adjusted returns on the portfolio. And so you can see that in the data here where you add 2% of your portfolio to Bitcoin or 5% or 10%. And the more you add to your portfolio, the higher your Sharpe ratio goes. And that's why the Federal Reserve said 5 years ago that Bitcoin could be used to diversify your portfolios because it's a non-correlated asset class. And then I mentioned earlier that Bitcoin's been, the best performing asset class 10 out of the past 13 years. And this is the data that shows that. You see that, when Bitcoin does well, it significantly outperforms other asset classes like large cap stocks or small caps or REITs or international or emerging markets or high yield bonds. Last year it was, it was a very poor performer. But you can look at the years where it performed poorly, and then the next few years it did pretty well. Bitcoin does go through halving cycles. So the amount of new Bitcoin that gets issued out to or rewarded out to people who clear the transactions on the network, that Bitcoin gets cut in half, the reward gets cut in half about every 4 years. And so based on that, if the half of the supply is, eliminated, then the prices on go up. If you have the same or equal demand, or even more demand. And so that's what this chart follows. It's that halving cycle. And so the purple columns there are the 12 to 18 months after a halving. And those are generally the best times to be invested. We went through a bear market. We're in the accumulation phase today. And probably in about a year from now, or 9 months from now in the fall, we'll start to see the purple column, the next bull market start to on Bitcoin. I'm gonna go through just quickly our 4 models on how to value Bitcoin. This is our most basic model. All it is trend line analysis. We plot out the historical price of Bitcoin on a logarithmic scale, and we run a regression line through the center of that. And so half of the value is above that dotted line, half the value of Bitcoin is below that dotted line. Even though this is a very simplistic model, it's 90% correlated to the historical price of Bitcoin. And so this model says that Bitcoin should be worth $97,000 today, and it's trading for $17,000. Another model that we use is based off Metcalfe's law, which is how you value networks. We square the number of users. We multiply that times the transactional value flowing through the Bitcoin network. And this model is about 94% correlated to the historical price of Bitcoin. This model says today that Bitcoin should be worth about $41,000. Like I said, it's trading for about $17,000. Another model that we use is based on a stock to flow ratio. So stock to flow ratios are how you value commodities. So gold is the scarcest asset on earth based on stock to flow. And so what stock to flow is you take all the gold in the world that's ever been mined, that's the stock of gold. The new flow of gold is the amount of gold that gets mined every year. And if you divide the stock divided by the flow, you come out with a 60-to-1 ratio. And if you do that with Bitcoin, the ratio is 57-to-1. And so gold is scarcer than Bitcoin is. But what happens in May of 2024 is the amount of new gold, or the amount of new Bitcoin, the flow of Bitcoin gets cut in half. And so Bitcoin's stock to flow ratio is going to go from 57-to-1 to 114-to-1 in about 2 years. And when that happens, Bitcoin will be the scarcest asset on earth. And if you look at the value of all the gold, it's about a $10 trillion market value. If you look at the value of all the Bitcoin, it's about 400 billion. But if Bitcoin's gonna be scarcer than gold in 2 years, you would think it'd be worth more than gold. And so that's what this chart measures. It measures that stock to flow ratio and how we value that. Anyways, this model is 95% correlated to the historical price of Bitcoin. And this model says that today, Bitcoin should be worth about $100,000. And in 2025, it should be worth $1 million. And in 2029, it should be worth $10 million of Bitcoin. And like I said, this model is 95% correlated to the historical price of Bitcoin. And then our most accurate model that we use, it's that same stock to flow analysis, but instead of valuing Bitcoin in dollars, we value it in gold. And this model says that Bitcoin should be worth about 100 ounces of gold today, and it's only trading for 10 ounces of gold today. So Bitcoin is very undervalued in terms of gold, and this is our most accurate model. This model has historically been, since 2010, been 99% correlated. And so this model is telling us that it's highly correlated, but and Bitcoin is very undervalued today. And then in 2025, the Bitcoin should be worth 1,000 ounces of gold. And in 2029, it should be worth 10,000 ounces of gold. Bitcoin is very volatile. There were several times last year where it dropped 50 to 60%. That's normal. We're in this price discovery phase of trying to understand what this new monetary layer of the world is going to be worth. In my opinion, it's priceless. And the rest of the world is trying to figure that out today. And so because of that, you're going to see lots of volatility in the price. There's been questions about, will the government ban this? The SEC chairman, Gary Gensler, has come out and said the SEC has no plans to ban crypto. Jerome Powell, the Federal Reserve chairman, said no intention to ban them. And Brian Brooks, the former comptroller of the US currency, has said nobody's going to ban Bitcoin. The reason they say that is that back in 1996, the Supreme Court had decided that software, specifically cryptographic software, is protected speech. And you can't outlaw software in the United States. And that's all Bitcoin is. It's cryptographic software. And so the Supreme Court had already decided, a long time ago, before there was even Bitcoin invented, that you can't outlaw software in the US. It's protected under the First Amendment, just like speeches, like if you're speaking German or French. And the last slide I have here is, why do you want to invest in this asset class? Like we talked about, it increases your Sharpe ratio. It's the next new mega trend based on S-curve analysis. It increases portfolio performance. It's still a misunderstood asset class. Like I said, only about 1% of the world understands what this is. And as the next 99% come to learn, it'll gain in value just because there will be more knowledge around this. And then it's protection against economic uncertainty as we transition from this fiat system, this experiment we've been on for 50 years, back into a commodity-based monetary system, which I believe is going to be Bitcoin. And then that's it. So I'll go ahead and stop and we could do some Q&A.
Sorry.
Thank you, Brian. Yes, open for questions. Stephanie?
Hi, Ron. Thanks, Brian. I have a question because I was just talking about this today with my husband. So why is, I actually have several questions, but I'm going to combine them into one. So why is Bitcoin right now, it's so undervalued? What are the things? Only the stock market and the fact it's so volatile? It is, a lot of friends, that I know that they sell them when they foresee what's coming, and then they buy them. Is this a kind of asset that's suitable to hold for a long time, or it is an investment you should kind of monitor just like the stock market to just ride with it? When it's high you sell, when it's low you buy. Or should we keep it as an asset for long?
I wouldn't trade Bitcoin, and the reason is that if you look at the historical price movement of Bitcoin, 98% of the time that you own Bitcoin, it's either down or flat. All of the performance of Bitcoin comes between 5 and 7 days per year. So only about 2% of the time you own Bitcoin constitutes all the performance or generates all the performance of Bitcoin for that year. And so there's no way to guess when those, when that, 2% of the days occur. So you can't trade Bitcoin. It's best just to buy it and hold it for the next 10 years to 20 years and let the rest of the world catch up with the understanding of what this is. It's going to be very volatile as you hold it, and the volatility will be on the upside and the downside. I've seen Bitcoin go up, 1,000% in a year, and I've seen it go down, 85% in a year. So that's just the nature of the beast. And the volatility is the price that you pay to own the best performing asset class over the, best performing asset class 10 out of the past 13 years. You're not trying to get a return like on Bitcoin for free, but the volatility is the price that you pay. So I would just buy a dollar cost average into it and hold it for at least 10 years with no intention at all of selling it over that 10-year period.
Hey, Brian, would you just spend a minute explaining how one might buy it in a safe way?
Yeah, so there's several ways to buy it. So if you have a PayPal account, you can buy Bitcoin at PayPal. That's generally pretty easy to do that. The Bitcoin can't be transferred out of PayPal, which I look at as a safety feature, so it can't be stolen. So buying it at PayPal is a good way of doing it. My daughter buys Bitcoin through Venmo, her Venmo app, which is another good way of doing that. If you're buying large sums of it, you probably want to go through a qualified custodian. So that could be like Fidelity or a company called Coinbase. Coinbase, their customer service is awful. I wouldn't recommend Coinbase, even though I was an early investor in that company back in 2014. I would say Fidelity, and PayPal and Venmo are probably the best ways of doing that. And Robinhood, if you have a Robinhood account, you could buy Bitcoin at Robinhood too.
I'll give other people an opportunity. Other questions?
Brian,
Brian,
go ahead.
Brian, sorry, because this topic is here for buying. So would you like to throw some light on, hardware-based wallets where we can just keep it offline as a safety thing, just for the purpose of everyone here?
Mm-hmm. Yeah, so there's two ways to custody Bitcoin. You could use a custodian like I said, Coinbase, PayPal, Venmo, Robinhood. The other solution is that you could self-custody your own Bitcoin. And so you could use what's called a ledger or a trezor to self-custody Bitcoin, and those are called hardware wallets. There is risk with doing that. The risk is that you screw it up or you mismanage the private keys somehow. And if you mismanage those keys, your Bitcoin's gone forever. It's like losing your wallet or your purse, full of cash. It's just gone forever. Personally, I custody. I've gone back and forth of the last 9 years. But I custody my assets at Coinbase in the vault there. I don't self-custody mine on a hardware wallet. I think there is some risk there of mismanaging it. And I know a lot of people who've mismanaged their private keys and they've lost access to their Bitcoin by doing that. But, but the risk with using a custodian too is that, your custodian could fail and, you could, lose your Bitcoin that way too. So there's risk with both of those.
All right. So another question is, how do you value Bitcoin over other cryptocurrencies like Ethereum and, many cropping up?
Yeah, so Bitcoin, the government, through the SEC, the Federal Reserve, and other agencies like the CFTC, they've all said that Bitcoin is a commodity, and all the other ones like Ethereum are probably going to be classified as securities. And so, I think right now Bitcoin is the only true use case for blockchain technology. And Ethereum and all the other ones are basically software companies that will eventually be forced to register with the SEC. So I wouldn't invest in anything besides Bitcoin.
Thank you.
You're welcome.
If there are no questions, maybe, Brian, could you speak to the use case of Bitcoin in commercial exchanges?
Mm-hmm. What do you mean by commercial exchanges?
Basically, the use case as a form of currency.
Yeah, so in the United States, Bitcoin and other digital assets based on blockchain technology, they're considered property by the IRS, not currency. And so the problem with that is if you have property and you try to spend that, you have to report it to the IRS. And so inside the United States, it's like you own Apple stock or Facebook stock. And if you want to go spend Facebook stock at Starbucks, you have to convert it to dollars first and then spend the dollars. But when you convert it from Facebook stock to dollars, that's a taxable transaction. That's a capital transaction. And Bitcoin's the same way. When you convert Bitcoin back into dollars, that's a capital transaction. So every time you spend it, you have to report that to the IRS on a Schedule D. And so in the US, it's not really possible or practical to use Bitcoin as a currency. There is a de minimis rule that's trying to get passed in the United States Congress. So the negotiation started off at $600, where $600 of Bitcoin transactions would not be reportable. The IRS said they would be comfortable with $50. And so that's where the negotiation is right now. So I end up somewhere between $50 and $600. Once that law gets passed, I think we'll see more Bitcoin being used as a currency. But right now, even if you spend $1 worth of Bitcoin, you have to report that to the IRS. And so, that's in the US. If you go outside the US, in Europe and most of Asia, Bitcoin is considered currency. So in Germany, if you have Bitcoin and you convert that into euros, you don't have to report that to the German tax authorities. That's because it's considered currency. It's just like converting dollars into euros. So outside the US, Bitcoin can be used as currency, but in the US, the IRS has made it impractical to do that.
Let me just have a follow-up question. In the multiple models you use, you had 5 different models, and they're basically historical, and there's some cause and effect that correlates these, different asset classes you were comparing or different commodities. Are the assumptions underlying those historical ones hold true based on what you just said about here in the US it being a property and in other countries considered a currency?
Mm-hmm. Yeah, so each of the models are, use different inputs. So the one I like most is this, is the Metcalfe's law. So Bitcoin is a network. All it is a computer network that allows us to transfer value through the internet. So the more users and the more value that's transferred through that network, the more valuable the software will become. And so it's exponential because you're squaring the number of users. And so as the number of users increase, you'll see exponential growth in the value of the network. And so, yeah, it's all determined by the number of users. If it catches on and people are using this to transfer value, and transfer value doesn't mean spend, you could just use it to transfer value back and forth between people. And if you're transferring value through the network and there are more people using it and there's bigger dollar amounts going through the network, the more valuable that network becomes.
Hey Brian, this is Jared. I was hoping you could unpack and issue your thoughts a bit more on the energy usage to create Bitcoin. I work in the energy industry. I've done a bit of this, putting out miners at stranded energy locations. For me, it was a bit of a fool's errand because there's always another spot for that, right? You're taking energy and you're turning it into a value of Bitcoin, right? And as a producer of that, you are the producer of that energy. You have the capability to take that elsewhere. Maybe I have some stranded natural gas, and I'm going to run it a pipeline. I'm going to put it there, or I'm going to burn that and turn that into electricity. So it seems like a lot of that is very much tied to commodity prices or energy prices, because it is a very energy intense compute function to do that. I wanted some more thoughts around how it is tied into the energy of producing it. It just doesn't seem like it's right. In my mind, there just isn't vast amounts of stranded energy out there that you just like, oh, I'm going to plug into a Bitcoin mining, a computer and run it, and it's essentially free. I think that is a bigger part of calculus, but I'm curious your thoughts.
Yeah, so actually it's better than free. I'll give you a great example is Ameren, local utility in the St. Louis area. So Ameren gets paid by the green energy companies. So these are windmills in Illinois. And so the windmills in Illinois, they have stranded energy because there's not enough population in central Illinois to use up that electricity. And so because the windmills are government subsidized, they actually pay Ameren 7 cents per kilowatt hour to take the electricity off their hands. And the windmills are still making money because of the government subsidies. And so Ameren gets paid 7 cents a kilowatt hour to take that electricity. And then what they're doing with it is they're mining Bitcoin, and they're creating another 25 cents per kilowatt hour of profit off mining Bitcoin. So they're taking something they're getting paid to take, this stranded electricity from the windmills, and they're converting that into Bitcoin.
I guess that scares me even more when it's totally, when you're basing your economic off of they're basing their decisions off a government subsidy to pull power off the grid. Or how am I not thinking about that right? I guess when I hear that makes me nervous.
Well, I mean, what makes you nervous about that?
I mean, like anything, like the economics of I guess the electric vehicle, or basing a lot of this basing that on the economics on a government subsidy other than just pure capital markets.
Yeah. So another example is that there are oil rigs that pump oil. They have gas that they have flare gas. Okay, so there's a company called Caruso that makes a Bitcoin mining.
Yes, very familiar.
Okay, so yeah, they take that flare gas, and instead of burning it and turn it into CO2 in the atmosphere, they capture that and they produce electricity out of that. They create a
and I guess that's where
that mines Bitcoin from that.
Yeah, my expertise is in that, and having done that, and the economics on that are very, very thin, if not negligible, really based on natural gas pricing. And I guess that's where my expertise comes from, is that production side of that. Is I know the guys at Caruso and kind of their models, and there just isn't a whole lot of other growth in that. I don't want to go down that road because of natural gas, right? Natural gas is so well priced right now. It's more beneficial to just pipe it and sell it than it is to mine it.
Yeah,
I don't want to take
that's what the Bitcoin mining industry does. It goes out and it finds the cheapest source of energy. And so where it gravitates towards is the stranded energy that's out there. Another great example is China. So the reason the majority of Bitcoin mining was done in China up till about 2 years ago.
Yeah.
Because 30 years ago, China went on a building boom of building hydroelectric plants. And so you have these hydroelectric plants that are in rural locations in China, and there's not enough population to use up that electricity. And so the local governors were allowing Bitcoin miners to co-locate at their hydroelectric plant and buy electricity at 1 cent per kilowatt hour, because otherwise they're not getting anything for it. And so the central Chinese government, over the last 7 or 8 years, they've been going to these local governors and saying, you need to shut this down. We're not for Bitcoin because it's freedom money. We don't want that in our country. And so the local governor would say, okay, we'll shut it down. They'd flip the switch off, and as soon as the Communist Party would leave the province, the local governor would flip the mine back on and start mining again, because they rather get the revenue. And so what happened about a year ago, last summer, was that the Chinese government said, not only are we make you flip off the power, turn it off, we're gonna watch you move all those Bitcoin mines, that mining equipment, out of the country. And so they had to move the equipment out of the country, and a lot of that came to the United States. So if you look at China, they were at right around a little bit of a 50% market share for Bitcoin mining. Now they're about 20%. And then that extra 30, a lot of that came to the United States. And so now the US constitutes about 1/3 of the Bitcoin mining capacity of the world.
Cool. Interesting. Thank you.
You're welcome.
Brian, you mentioned earlier, you said the maximum amount of Bitcoin is going to be 21 million. Is that like defined, or
that's hard coded into the software.
1 million?
That can't be changed. It's hard coded. It's at a predetermined rate. It started off at 50 Bitcoin every 10 minutes. when the Bitcoin network launched. And then about every 4 years, it's exactly every 210,000 blocks of data. And it takes about 10 minutes to mine a block. So 210,000 times 10 minutes comes out to about 4 years. So about every 4 years, that reward gets cut in half. So it went from 50 Bitcoin every 10 minutes to 25 to 12 and a half. And right now it's 6.25. And then in May of 2024, the reward goes from 6.25 Bitcoin to 3 1/8. And then in 2028, it goes to, half of 3 1/8, whatever that comes out to, 1.65 or whatever that comes out to. So it keeps getting cut in half and half and half. There's gonna be 32 of those halvings over the, until all the Bitcoins released. And, we've had 3 of the 32 halvings. So about, 91% of all the Bitcoin that can be mined or issued out has already been issued out. And it's going to take, about 120 years to issue out that last 9% of it.
Hey, Brian, I have a question. So the encryption is built on SHA-256, which is what most of our encryption is built off of. So do you have any concerns over quantum computing and what that could possibly do to the security of the blockchain?
Yeah, so if quantum computers ever get to enough power and capability of hacking SHA-256, what the developers will do is increase the cryptography up to SHA-512, and then up to 1024, and then SHA-2048. They would just keep turning out the encryption, and then every time you do that, it takes more and more energy to hack the code, right? To break the encryption. So what eventually happens is that there's not enough electricity in the world to break the code and break the encryption. And
yeah, I get this. So my understanding though is that you have to send it to a new wallet in order to add that encryption. So dormant wallets, which is probably about a third of the supply, would potentially be at risk, not be able to be updated. So I'm curious if you think that could affect the value of it long term. I mean, worst case scenario, I guess it'd be put back into circulation, but you still have a 21 million cap, right?
Yeah, but if there's the reason that Bitcoin hasn't moved, there's no economic reason to move it. I mean, people don't move their Bitcoin just to move it around. So if there's a security risk, then people are going to move the Bitcoin to something more secure. So
got it.
Good question though.
Yeah. I do have a follow-up question too. So yeah, I do store some of my crypto on Coinbase. It is FDIC insured, which is great. I personally
Coinbase is not FDIC insured.
I believe
so the cash, any cash up to 200, any US dollars is FDIC insured, but the Bitcoin's not.
So I don't personally leave my assets on exchanges, because if they were to go bankrupt, you could be looked at as a creditor, and that's happening with other exchanges right now.
Right.
That said, there are some recent audits that are showing that these centralized exchanges are showing balances of Bitcoin on paper that don't actually exist on the blockchain. So I think that's actually a bullish case for Bitcoin, because in these audits, they're showing that they're showing 30 million of supply in circulation. There's a max of 21 million. So I think actually a lot of buying power was suppressed in this last market cycle that could come into the next market cycle. So I remain very bullish on Bitcoin long term myself.
Yeah, I do see that. That's good data. Where'd you find that 30 million number?
So I spend a lot of, I can probably send you the link to it, but I spend an enormous amount of time researching crypto assets. I've built a couple of businesses around blockchain technology. So I would
like to see that. That's great.
Yeah, absolutely.
So
yeah.
my thesis has been the futures market is suppressing Bitcoin because they're basically creating paper Bitcoin with futures contracts. And that's, part of the way the government's suppressing the price, just like they did with gold for a number of years.
Yeah, I think in the FTX details that we find out here, there is probably a fair amount of Bitcoin that they were showing balances, but unless you were to actually withdraw your Bitcoin, they weren't actually purchasing it on chain.
No, they weren't. You were buying Bitcoin and they were just giving you credit for Bitcoin without actually buying it.
That's right. So
Yeah.
I think there is a lot of buying pressure that should have moved the price higher in this last cycle that didn't.
I 100% agree with that.
Yeah.
Maybe in the final moments, Brian, if I could ask you to take the haters' point of view, there are many people who don't share your optimism for the future. And I'm sure you've heard these and can, maybe synthesize them. Why is there such a, kind of a unified agreement against the Bitcoin case?
Yeah, I think if you're a government official, a lot of people in the U.S. government, we benefit. The U.S. benefits from having the dollar as a reserve currency, but the rest of the world doesn't. So I'll give you a great example: is that when Russia invaded the Ukraine, the United States basically stole $650 million from Russia. They took possession of their central bank reserves in the U.S. That's the first time the United States has ever done that, actually taking another central bank's money from them. So, if you're another country outside the U.S. and you just saw the U.S. hijacked $650 million from Russia, you're probably starting to think, well, maybe I shouldn't keep my money in dollars anymore. I should move it to something else. And so, I believe the U.S. has weaponized the U.S. dollar, and that the rest, we in the U.S. we don't care because we benefit from that. But if you're outside the U.S., you do care if the dollar is being used as a weapon against you, and it's been weaponized in the form of inflation in other countries. When we print more money, and your country is based, tied to the U.S. dollar, your people are absorbing that inflation. Your prices are going up on your food and your housing because we overspend in the United States. And so, I just think that the world's I finally figure out that there's a better system out there that's based on what we call hard money, where it's a fixed supply. And we use gold, for 3,000 years. No one forced humans to use gold. We defaulted as a human, right? Humans did into this gold standard for 3,000 years, but we were forced to go into a fiat standard. President Nixon forced the United States because what happened back in 1971 is that Charles de Gaulle, the president of France, was starting to get concerned that they were getting a lot of dollars into France, and they didn't want dollars because they knew that U.S. didn't have enough gold to back them up. They took all these dollars, they put them on a battleship, and they shipped it from France over to New York Harbor. And when it showed up, and this battleship showed up in New York Harbor with all these dollars, they wanted to convert them into gold. And Nixon said, "Oh, we're not doing that. We're temporarily stopping the convertibility of dollars into gold." And that that temporary suspension has lasted for 52 years. And so over the last 52 years, our money hasn't been backed by gold. It's just backed by full faith and credit of the government. And so we as humans, we're finally figure out that this system is not working. It's not working for us, and it's not working for the rest of the world. And we will default back into a hard money system. And I don't think we're going back to a gold system, because Bitcoin is a digital version of gold, and it has many more properties that are better than gold. You can move it through the internet, and you could, it's more portable, it's more divisible, it's more verifiable than gold, and it's just a better version of gold. So I think we as humans over the next 50 to 100 years will default into a Bitcoin monetary standard, and that Bitcoin will become the monetary layer of the world, just like gold was for 3,000 years. And it's not something that happens overnight. I mean, this is, a 50 to 100 year process, and then Bitcoin will be the monetary layer of the world for the next 10,000 years.
Yeah, and I'll also say every central bank right now is looks at it as competition, and every central bank right now is in the process of testing out central bank digital currencies on blockchain technology, and they want adoption on their digital currency. So they're going to FUD Bitcoin. But even the US right now is working on, they call them decentralized ledgers. It's blockchain technology, and they're working with all of our major banks on testing the digital dollar right now.
So they're using the same technology, right? Blockchain technology. The difference is that it's the monetary policy that's different. Bitcoin has a finite cap of 21 million. So even if you're using US dollars on blockchain, you still have 12 people sitting around an oval table every quarter figuring out how many of these dollars to create. That's not a sustainable business model. There's too much variability in that. So
absolutely, yeah, they're going to try to scare people away from Bitcoin and adoption of these other digital assets.
And they're doing a good job. So
they are. And when one thing
that presents the buying opportunity.
Absolutely. And Bitcoin, the blockchain itself has never been hacked, right? And the network has never been down. Centralized exchanges have been hacked, and people will get frightened because of that. But yeah, I mean, it's as secure as it can possibly be.
Even the Fed wire goes down every once in a while. So, yeah.
Well, Brian, thank you so much. This was very educational. I think I can speak for all of us on the call to extend our appreciation for this. We certainly will maintain a vigilance over seeing what happens to Bitcoin going forward. And maybe down the road, we can have you back and do a follow-up to see if you can connect the dots as time passes.
Yeah, I'd be glad to help. So
all right.
Thanks for inviting me.
Yeah, happy to.